Today's Tuesday, April 15th, and this is a status check on a position I took this morning involving the micro E-mini S&P 500 futures, ticker symbol MES, and as of the time of this recording, the S&P 500 is quoted at 5,452.5. And since the stock market has been trading, it's currently up a little over 13 handles. So this is the chart layout at the 5-day 10,000 tick level, which means each of these red and green candlesticks equals 10,000 trades consisting of both buy-side and sell-side trades. This is the current candlestick right here, this green candlestick. And at this point, that candlestick has tallied up a little over 3,500 trades having been executed so far. So whenever this reaches 10,000 trades, a new candlestick will be generated. So from this broad assessment, I've marked up this chart with a few reasonable support and resistance levels. And the most relevant one is 54.57.5. We can see that price just fell below that within the past 30 minutes. This line right here is just a visual markup as to where and when I took a short position, anticipating that there would be a pullback on the S&P 500. And the reason my bearish outlook is that for the past 2.5 days, price has just been consolidating sideways, pretty much ranging inside between or inside this gray rectangle. We see here that when price hit the top half of this range, there was no further continuation. Price fades down, retests, actually twice, and then pulls back to the bottom half of this range. And then we see price running right back up. So while price is at this highest point here, or at the top half of this range, I thought this was an ideal opportunity to participate on the downside move. And it's pretty much halfway to retesting that. So that was my overall thesis for a bearish outlook on the S&P 500. And even though price has been trending to the upside, right? So we have all of this where price here, there was another consolidation phase going sideways, and then price started working its way to the upside. So it's possible that after this consolidation, this entire up move could potentially get reversed, coming back down. So again, that was my general thesis for a pullback. So with that said, switching over to the trade tab. Now I didn't short the actual futures. I shorted via future options. So right here under the option chain section of this dashboard, there's a flag position pegged to option contracts that will be expiring at the close of this Thursday's trading session, April 17th. Now, this Friday, the stock market is closed in observance to a religious holiday. So that's why expiration Friday is this Thursday. So down here at the bottom left are the details. So relative to the current spot price of 54.58, I selected the 53.50 strike price. And as a buyer of option contracts and bearish, I'm on the put side. So essentially what this contract is saying is that on or before the close of this week's trading session, April 17th, I'm anticipating S&P 500 will be at or below 53.50. Under quantity, I've picked up 2 of these contracts. I wanted to keep the trade size small, considering that this is trading the options, which has time decay as a huge factor. And also, these contracts expires in 2 days. So I didn't want to overload too many contracts, because if this trend does continue going sideways, that is a detriment to any option trade. So again, I thought mitigating the risk with only 2 contracts. Both contracts, as mentioned, will expire worthless in 2 days. My entry price is quoted at $19.50. The premium, now that the trade is slightly going in my direction, is now valued at $22.75. And the overall P&L, the profit and loss side of the ledger, is reflecting a positive balance of $27 and change. So just to show, I'm holding a position here as well. If I click on the timestamp, the first contract I picked up was at $21.50. And then the second contract I picked up was when the premium dropped to $17.50. And between the two prices, it averaged that to $19.50. So now that I've covered my bearish outlook on the S&P 500 over the next 2 days, as well as the current status, so now the P&L was just showing $67 a little while ago. The last thing I want to touch on is the valuation for getting into this trade, or what the cost was to me for picking up these two contracts. So right here in the description of this contract, it says 1/5. So the multiplier is 5. So to get the valuation, my entry price is quoted at $19.50. I need to multiply that by 5. So that means one contract is actually valued at $97.50. And I've picked up two of these contracts, not including commission. I'm risking $195 over the next 2 days for the prospect of at least a 150-point move to the downside. So that is the status of all things. For the purpose of time, I will pause it here. Now price is trying to break above. Yes, I'll pause it here until something more significant does occur. I'll update accordingly. So, quick update. Today is Wednesday, April 16th, and the stock market has suspended trading about 45 minutes ago, but the futures market is still trading. And as of the time of this recording, the S&P 500 is quoted at 5,307, and overall trading, it's currently down 120 handles. So, as I was mentioning in the initial review, was that price was stuck in a range-bound or sideways pattern. And this is the entry where I took at the upper half of this range. And based on my assessment, there was a probability that price was going to come down and break the overall market structure towards the downside. And moving time ahead, we can see that consolidation was broken. Right here, there was a gap down. And subsequent to that, price ran up, filling this gap, which nullified any gap concerns, and price continued selling off. And right here, there was a bit of a rally towards the closing session of the stock market this afternoon, but it's possible that this also could lose momentum heading into the overnight session when the futures market starts trading later this evening at 6 p.m. Eastern. So because price did break below 52.60, I had a limit order sitting there to close out the trade because I was not thinking this was going to come down this quickly. I thought this trade was going to drag out all the way through to tomorrow. But I am out of this trade, and what I'm referring to is that if I switch over, so this split screen is involving two charts. The chart on the left is the 10,000 tick chart. The chart on the right, it's specific to my option trade. So right here by the ticker, it says X3DJ25P5350. So 5350 is my option strike price. When buying an option contract in bearish, it's on the put side, and that's what the letter P is pertaining to. X3DJ25. 25 is the year. J is the alpha code for the month of April. D is the alpha code for Thursday. So A is Monday, B is Tuesday, C is Wednesday, D is Thursday. So this is the expiration for the third Thursday, which is April 16th. So this is still, again, specific to my option contract. And right here, there are two confirmation bubbles showing that here's the buy confirmation where I picked up those two contracts at 19.50. And here's the sell confirmation showing I sold them at 102. And if I click on the timestamp, this order was filled during power hour, the last hour of this afternoon's stock market open. So that's when this order was filled. And that coincides with this spike to the downside. As we can see, that price started running up and then the premium started dropping again. So I was able to place the limit order at the appropriate value. So I am out of the trade. If I open up active trader, the position is flat. So to get the valuation for this closing, so my entry price or exit price is at 102. And the multiplier is 5. So that means one contract was sold at $510, having sold both. The gross profit was $1,020 and minus the $195 for the cost of getting into the trade. So this is the approximate net profit. I have yet to remove the commission fees, but I'll provide a breakdown of that. But overall, this was about an $815 day trade, considering that I got into the position yesterday and I am out of this trade today. So again, from that perspective, this is a day trade from my side. Again, my entry here was yesterday morning on at 9:44 a.m. and then this trade was closed out this afternoon at 3:09. So see that price is starting to fade back to the downside here. So what I'll do is I'll provide a breakdown at the end of this recording. So until the next trade setup, more to follow.